Alright guys, so today we're going to be going over drivers, how to validate that with your framework. So this is very important to understand because the way drivers react to certain key levels within manipulation and continuation actually can confirm narrative for you. One of the most consistent things that you're going to see in the market. So when I refer to like a framework and stuff like that, this is very important. Drivers and SMT. We're going to go over SMT maybe next week. Um, and these things are very important. Like this is how you avoid pattern trading. And yeah, this is how you confirm narrative. Is this going to be? Yeah, I'm going to be posting the slides of this for my YouTube video. Be using the same slides probably. I don't know if I'm using all of them, bro. I don't know. I don't want to give away too much. But yeah, y'all gotta tell me what I should add and what I shouldn't, because there's quite a bit of slides. So now let's start. Now this is the economic calendar. This is going to be some basic things, but this is some. We're going to be filtering out some misinformation about pairing drivers with a certain asset class, etc. So if you're a forex trader, um, you're really looking at the two currencies within a currency pair. You're going to be referring to those currency red folder news events, right? So if I want to trade Euro USD, I'm going to be looking at Euro and USD red folder, right? If I'm trading GBP JPY, I'm going to be referring to GBP in JPY red folder news. Okay, pretty simple stuff. Now, one thing I will say, USD news events for these really for almost all the currencies, like CPI, NFP, I feel like they affect all the markets. That's what I've seen before. It's kind of interesting. Um, I don't know if it's the other way around. Like I don't know if Euro affects GBP. It might. Something I got to test. I don't trade forex, so I really don't know. But that's something I wanted to point out. Now for indices, we're only referring to USD red folder news events and 9:30 every single day. Now this is specific to indices only. I see people mark out 9:30 on forex. I see it on oil and gold especially. It's absolutely irrelevant. There is no 9:30 open for gold and oil. It doesn't affect it. Okay, so it's absolutely irrelevant. Another thing is a lot of people think that 8:30 every day is something that is relevant. That's not relevant at all. Um, Only on red folder days. Okay. Um, Now, what makes indices market so unique, and I think the best market, is because we have this driver every single day, which can validate and confirm narrative. Unlike these other pairs where we only have the economic calendar to refer to. Okay. So now with gold, we're only referring to USD red folder news events. That's the only driver you will have. And for oil, another misconception is I see people think that USD red folder news events affect oil. That's not the case at all. Uh, Energy has its own economic calendar. It's called the energy calendar, and we're only referring to red folder news events as well. Uh, Now, these are if I was going to trade, I would only trade these assets because this is what I can refer to uh, within correlated assets within triads, right? So these are all asset classes, right? But there are three correlated markets within the asset class. So here's indices. I mainly refer to these three. I don't really refer to RTY, only with YM. Now that's something we're going to go over SMT, but if I want to refer to gold and I want to look at cracking correlations or just intermarket analysis, I'm going to look at gold, silver, and XAU euro. These are all correlated. And for oil, it's CL, RB, and HO. Okay, just want to point that out. Now, how to actually navigate the economic calendar, because first step is going to Forex Factory. When you log in, this is what you're going to see, a bunch of nonsense. We want to filter out this to clean it up. So you're going to click this icon here. You're going to toggle this green filtering icon, and we're going to uncheck all the boxes. You're going to check, these are all going to be marked. You're going to check the white, the yellow, and the orange, right? These are irrelevant for using drivers and whatnot. And you're going to apply this filter. Also, whatever currency you're trading, like I mentioned, if you're trading gold, then you only check USD. If you're trading oil, this doesn't matter. If you're trading indices, it's only USD. Now, if you're trading like odd CAD, you check odd CAD, uncheck everything else, right? Apply the red folder, apply, right? Now this is what you will see, right? This is your economic calendar, your roadmap. Now, a caution protocol. These are really the drivers that we really care about. It's NFP, CPI, and FOMC press conference. These are what's going to really drive the market, and really what you want to pair, the high of the week with, low of the week with, etc. High of day, low of day, or continuation, etc. And now I would say majority of the time, not even majority of the time, just don't enter before. I know you guys saw me enter prior to NFP. That's very specific, and that's actually going to be covered in this video. But yeah, just wait for this driver to pass, because this is where a lot of times we cannot anticipate, where price is going to go, especially with certain framework, etc. Right? So any other red folder news event, I will consider entering prior to. Okay, but these three, generally you want to avoid. Okay. Now, how to find the economic calendar for energy or oil? It's going to be in the left-hand side of Forex Factory. When you're on this, just the home page or whatever it's called, the calendar page, this is going to be here, and you're going to click energy calendar, right? And then this is going to be pulled up, same thing. You're going to filter out. We're only caring about red folder news events, etc. Right? So now we're going to go over. This is what it's going to look like, right? Use your energy roadmap. Same thing. We're posting it the same way. Now we need to go over a little bit about framework, because you need a little understanding of framework to know what to trade away from, or what to pair your manipulation with, right? So this is pretty simple, right? What do we trade away from? What do we trade towards? We're always trading away from manipulation, ideally, and we're always targeting failure swings, right? So we wouldn't be trading a driver away from failure swings. We'd want to be trading it away from some sort of manipulation, right? So how to map out relevant manipulation is within. You need to understand what relevant swings are, right? This goes back to AM's course. It's just the space between highs and lows, right? You see this low here is a failure swing to this low. So we would never trade away from any failure swing. So ideally, we want both of these lows to be manipulated, right? So that's just that little pretty simple. Now, this is what we want to pair our manipulation with, like I mentioned earlier, right? It's within relevant swings, right? When you manipulate a relevant swing, this is what creates a protected swing, right? So when we actually engage with a relevant swing, this is where we look for phase of price, right? If you go back to April 5th stream, this is what we go over, right? We're going to get some sort of phase of price, right? And every phase of price has signatures, right? That will, tell us what phase of price is occurring, right? And then we can anticipate what's going to happen next. So that's what we're looking for, right? We're looking for a reversal signature at this relevant swing, and this is what we would trade away from, right? Now, this is something we would not, really use here, is a failure swing manipulation, right? Because this is still a failure swing, right? Look at the space between these lows, right? Still a failure swing. So we don't consider this a true reversal, right? Because there's still a reason to return back this low, like I said, because it's still a failure swing. This is what we require. We require both lows to be taken, right? Because if we manipulate both lows, there's no reason to return back to this low, because everything in close proximity to this price is already cleared out, right? It's already manipulated, right? Look at the space between these lows. So you need to understand this, because this is what we're trading away from, right? And what we're pairing manipulation with. Now, as far as key levels go, these are the key levels that we use, right? Ideally. So it's key levels that are formed after a protected swing is formed, right? Because after a protected swing is formed or manipulation, this is when we expect expansion, right? So within expansion, what supports price? Order blocks, fair value gaps. We want to reject lows, etc. So these are the fair value gaps and order blocks that I really care about, right? And also the CSD as key levels. Now, remember what we talked about a couple streams ago within continuation, specifically like daily continuation. We're referring to hourly and 30-minute key levels to support price higher, right? Now, this can be fractalized. This can be the weekly low. So maybe this is Monday opening low, Tuesday consolidation, Wednesday manipulation. I expect Thursday and Friday to expand, right? So these key levels can be on the 4 hour and 1 hour to form the low of the day, right? It can be a fair value and order block, right? Because remember, if we're trading the protraction phase of daily candle, the low of day, high of day had to be formed from a 1 hour or 30-minute key level, right? So you can fractalize that. Now, talking about driver pairing, continuation versus reversal. These are the if-then scenarios we set prior to a driver. These are very consistent. So if a reversal has been put in prior to a driver, we trade into a relevant level, maybe a relevant swing, and price reverses. So now it's a protected swing. The driver should continue away from that reversal, right? So when you see the driver actually, print that continuation signature, that is a validation of narrative, right? That tells you that that is a true reversal, and we will continue, right? So if a reversal has not been put in prior to a driver, right, then we want the driver to go actually put in that reversal, right? So maybe prior to the driver, maybe we haven't even traded into a relevant level, or maybe we did trade into a relevant level, but we didn't reverse. Well, what does that create? Remember what we talked about with our invalidation video? If we trade into a level, maybe we trade into a fair value, if we create a swing point, price doesn't expand away from the swing point, well, that's consolidation, right? So that becomes the level that we would want to see the driver go in reverse, right? Situations like that. So if the driver fails to reverse at these invalidation level, well, that's your invalidation for the whole day. And this is a good example of like Thursday, right? We saw that we traded back into the range, but the driver failed to reverse. That's a day that I don't trade. I know it continued, but majority of the time, I will not trade that. I want the driver to actually go and put this in reversal, or go and put this reversal in, because I'm not caring about a reversal that forms at like 12 p.m., 11 p.m. It's too late in the day. These are not relevant times in the day. When you pair it with a driver, this is when you get much higher probability reversals, right? Now this is the if-then scenario. What if you have a two-stage driver event, especially on indices? This is going to happen a lot when you have 8:30 driver. So if 8:30 goes and creates the high and low of the day, this is when we anticipate 9:30 at 10 o'clock to continue, right? Because this goes back to here, right? If prior to 9:30, if 8:30 manipulates, well, this is this if-then scenario, right? Because prior to 9:30, which is the driver, we manipulate, so 9:30 should continue, right? And the same thing over here, right? If prior to this first driver, 8:30, if there is no high of day, low of day, then we want it to go in reverse, right? Now, if 9:30 manipulates, then 10 o'clock should continue. And all this is, you can simplify this with 4-hour profiling, right? Because within the 6 o'clock 4-hour candle, you have drivers, right? You have 8:30, 9:30. If those go in reverse the day, then I want 10 o'clock to continue, right? So when I say that 6 o'clock New York reversal is ideal, this is why. It's because you can pair it with a driver, right? I don't care too much about 10 o'clock New York reversals. It's very specific, right? It's when there is no established high or low of the day, right? I want the driver to go and trade into that level. There's a difference between it trading into a level and failing to reverse, which we'll probably go over in this later. So hopefully that makes sense. Now let's talk about driver continuation. This is when prior to the driver, we manipulate, right? So again, we should expect driver to expand away from that manipulation. This is just an intraday protected swing, right? On confirmed by the hourly at 30-minute fractal model. And now we're just trading, candle 4 away, right? Within that candle 4, we already have some sort of reversal, right? Confirmed by the 5-minute, 3-minute confirmation, because these are the swing points that we refer to, like, right, on the hourly and 30-minute time frame, right? As long as you get some sort of opposing candle confirming that the driver is expanding away from the initial reversal, that's added confluence, right? That's the driver expanding away, confirming continuation, right? Now this can look a couple different ways. This manipulation can form from a swing low, maybe forming a low of day, or even within expansion, right? This is that version, right? But what if it's within continuation with a fair value from the order block? What if we hit that key level prior to the driver and we have some sort of reversal signature? It's the same thing, right? If we hit that key level prior to the driver, we should just continue that expansion, right? Now, what if there is no high and low of day established, or maybe price expand away from low of day and is consolidating? Well, that consolidation becomes the, pretty much invalidation point, right? For either reversal or continuation, right? So you want the driver to go and trade into that level and manipulate it, right? And give us that reversal signature, right? So that's what that would look like. The driver expands into these lows, manipulating it. Now we can pair a driver with manipulation, right? So what if prior to driver, we are just in expansion, right? Well, for us to continue expansion, what do we need? We need a key level to be hit and we need a swing point, right? So this is when the driver will go and create that, right? The driver will go and tag this fair value gap and reverse. That's what we want to see, right? So this would be pairing a reversal within continuation, right? So it's a bit different where we're pairing reversal at the low of day, but it's the same thing, right? We're wanting the driver to go trade into a key level. These are both key levels. This is a fair value gap. It's a key level. The swing low is a key level. We want the driver to go and trade into that in reverse, right? So this is an example of invalidations. Like I said, prior to driver, you're always going to have an invalidation level every single time. In this case, it would be this low, right? This relevant swing, right? We want to see this be manipulated if we want to continue, because if you don't manipulate this, we're going to go to this next relevant swing, which in many cases, just in a scenario where it would create too large of a wick, that's your invalidation, right? But we can refine that invalidation level to this relevant swing, right? So if the driver trades into that level and then fails to expand away from that initial swing point, or maybe you don't even form a swing point, that's your invalidation, right? So here's an example of an invalidation within the expansion phase of the daily candle, where we have a low of day, we expand it away, so we want this fair value to hold, right? This goes back to my invalidation stream. If we retrace into this gap and don't form that reversal, well, then that's a pretty that's like an invalidation basically, right? We don't want to see that. Now, what about over here? Maybe we manipulate prior to the driver within continuation. Here's a low of day, we expand. Within the expansion phase, we have this relevant low. Look at the space between these lows, or these lows. We manipulate, we have a CSD on whatever time frame, 30-minute, hourly, whatever. We want the driver to expand away from that, right? But if it doesn't do that, there's an invalidation for this to be a protected swing, right? Because it should expand away. Now, here's the difference between protected swings, protraction versus expansion. When I refer to protraction versus expansion, this is talking about the daily candle, right? There's two phases within a daily candle. The protraction, which is forming the wick of the daily candle, so the open low, right, where the low of the candle is formed from a protected swing, right, which the low is just trading into a relevant swing, right? Demanipulation creates the protected swing. So that's the protraction phase, the open low of the candle. Now, within expansion away from the low of day, we can also form protected swings, right? Because we can form, expansion and a lower low, and then price manipulates that lower low, right? The space between these lows, right, within the expansion phase of the daily candle. If it's manipulated, that becomes a protected swing. So there's the difference, right? They're both very important to know. So this is always the best type of pairing a driver with continuation. This is the best type of scenario. It's when prior to the driver we manipulate a higher low, specifically a higher low ideally, right? We manipulate one, right, prior to driver. So what's the if-then scenario? If you manipulate prior to driver, what should it do? It should expand, right? Now this is specific when price is still within the protraction phase of the daily candle, right? We still haven't expanded within the daily candle. So what's the perfect time for price to expand, right? Or when is it? Around these drivers, right? If you haven't expanded away from the initial reversal point and also within the daily candle, then this is when you're going to get a one-sided, or when you should get a one-sided expansion move. And you can anticipate this a lot of times. So if you go back to my NFP trade, that's exactly what we have. We also have some sort of SMT going on, but that's prior to the driver, right? And we haven't expanded away from it. So this is when I'm anticipating a one-sided expansion, right? If you go back to my Monday trade on YM, same thing. The daily open low, we have a two-stage SMT prior to the driver. We haven't expanded away. So what should it do? One-sided expansion, which is what we get, right? So you can anticipate these things. After manipulation, we haven't expanded yet. We shouldn't consolidate. We shouldn't retrace. We should expand, right? So these relevant times are the perfect time to expand. Now, what if prior to driver we consolidate, right? So this can be within the protraction phase, right? Maybe London or Asia, right? Maybe they hit a key level, but they consolidate, right? Or maybe they consolidate in general. We don't trade away from consolidation, right? So that, in a lot of cases, will create a relevant swing. When it's manipulated, will create a protected swing, right? So this is what I mean by you're always going to have some sort of invalidation level, right? Where we want this to be manipulated, right? And if the driver doesn't do that, that's your invalidation, right? So when the driver does manipulate that level, creating the low of day, that's always ideal, right? The low of day created for manipulation and paired with the driver. And a lot of times, this will be when, if you get a little bit more specific, if the 6 o'clock candle manipulates but doesn't expand, well, what will 10 a.m. do? Be a one-sided expansion. Should be very violent or explosive. Now, what if prior to the driver we expand, right? Goes back to what we went over earlier. We want it to hit a key level, right? Because if we're going to check continuation, it needs to hit a key level. Now, when you expand prior to your driver, this is typically when you're going to get that opposing run or retracement at the driver. This is where we can pair it with the driver, right? So driver will retrace into a gap, put in some sort of swing point or reversal to trade away from, right? Within the expansion phase of the daily candle. So this is now this is this can look a couple different ways, right? Which we're going to show in a minute. Now this is within the protraction phase. I think I messed up the slides, the order here, but it's fine. This is when we trade into a relevant level, right? Creating a low of day. This can look a couple different ways. This can be in a 4-hour fair value gap, a 4-hour order block, or an hourly order block, hourly fair value gap. One of those 1-hour or 4-hour key levels to form low of day. This is when we hit that key level prior to the driver, but we haven't yet expanded away yet, right? So here's an example of price hitting a key level right before the driver. We haven't yet expanded away. So this is where we want to see the driver just immediately expand away, right? Because if we retrace into a gap or if we trade it into a swing low and we haven't reversed yet, well, we need to reverse, obviously, right? So the perfect time to do that is around that driver, right? So this is an example of, this creating a relevant swing here. Now, here's the same thing. This is the exact same thing, but within the expansion phase, right? Before the driver, we've already retraced into a gap. We haven't yet expanded away. So this is when you want to see the driver expand away, right? Because what do we do after retracement? We should expand, right? So the driver should expand away if we already are inside of a key level, right? Does that make sense? This is when we consolidate prior to driver within the expansion phase. Low is already put in. We've already expanded away. Maybe we hit a key level prior to driver or whatever, or we just consolidate. We have a relevant low being created prior to driver. Well, this goes back to my invalidation stream, right? If we have a relevant low, above the, or, that's created, above the daily open or whatnot, this should hold, right? We want this to be manipulated, right? Because this is what's creating relevant swings, the space between these lows, which you want to see manipulated, creating a protected swing. So ideally, the driver goes and creates this protected swing to trade away from, right? Within the continuation phase, or the expansion phase of the daily candle. Now, here's an example of that same thing, but prior to driver, we already manipulate this. We already have a protected swing, right? Maybe we already have the CSD as well, or whatnot, right? We already have a swing formation. We're already expanding away. Well, what should happen? We should expand. We should continue away from that that protected level, right? So when you get that lower time from continuous signature, that's what validates this as a true protected swing within the expansion candle, or within the expansion phase of the daily candle, right? So every time we hit a key level, maybe we hit a relevant swing, maybe we hit a fair value gap, we obviously confirm that with a swing point, right? And this is the swing point we refer to, hourly or 30-minute, on all time frames, okay? So this can be a 4-hour key level. We're still going to refer to an hourly or 30-minute. This can be a 30-minute key level. We're still going to refer to an hourly or 30-minute. Doesn't matter at all. It just matters, the relevant levels away from, within the protraction phase or the expansion phase, right? So within that swing formation, right, or just within any reversal or continuation, obviously we're going to have some sort of, CSD if we hit a key level prior to the driver and we already reversed, right? You're going to have that CSD. Now, how to confirm a continuation with the driver? This can look a couple different ways, where the driver will make an opposing run to the draw liquidity, which creates an opposing candle, and we close through that. That's how you pair it with the driver for continuation. This can look a couple different ways. Maybe on the lower time frame, we've already started to retrace, which creates opposing candles, and the driver just expands away immediately. It doesn't retrace at all, but it validates those opposing candles, right, that were formed prior to the driver. Same thing, right? The driver is still expanding away from the low of day, and you have some sort of key level to continue away from, which is the opposing candle, right? This is an example of confirming a reversal with the driver. We hit a key level around the driver or whatnot, and then the driver, creates that CSD, right, which is the confirmation for reversal. So this is what you can enter off of, or you can wait for the propulsion block or continuation order block, maybe within a candle 3 or whatever. So maybe the driver creates the candle 2 away from that reversal point, and then you trade candle 3, right, which is just an intra-candle CSD or whatnot, right? Now we're going to talk a little bit about positional entries. Again, positional entries are only within continuation, where prior to the driver, we've already manipulated, okay, into a key level. Now, it is very, very crucial that you understand that we need a couple of things. We need specific framework for this, okay? Now, one thing is we do not want expansion away from that key level prior to driver, because this is, again, when you can expect a one-sided expansion. We don't actually expand away from that key level prior to driver. This is when we get that one-sided expansion, right? So this is an example of, we have a swing formation, we have a candle 2 prior to driver. What should we do? The driver should expand away from this swing point, and it's just a candle 3 expansion, right? Now, in order to anticipate this low already put in, right, it's just like any swing formation, any positional entry. You need a one-sided bias, but you also need these bulky opposing candles or some clear invalidation level, right? So here's an example of the driver is opening near these clear opposing candles, right? If this gets disrespected, this will invalidate the whole, basically, swing formation, right? Because this would create too large of an opposing run, right? If we manipulate this level, right? So this is just an example of price opening near these clear invalidation levels. This is only lower time frame, okay? Now let's get into positional entries on the 1 hour, 30 minute, 50 minute. If you're an expansion model trader, this is something that you would probably take, right? Now I don't take these. We're going to go into something I do take, which is a little bit more conservative, but this is an example when, like I said, we already have some sort of relevant level to trade away from. So it can be, something that creates a low day. So here's an hourly manipulation creating a low day. We already have that hourly CSD or 30-minute CSD, whatever, right? This is when you can just set a limit here, right? Because if we already have the confirmation, what should we do? We should expand away at the driver, right? Here's an example of continuation, right? Where we have the initial CSD confirming the daily reversal, and then we retrace into the CSD or fair value gap, and we have that confirmation for continuation, and we're just opening up within that propulsion block or continuation order block, whatever you want to call it, around that driver. This is when the driver should just expand away, right? Because we want this to hold, right? This goes back to my invalidation stream, right? We want this to hold to confirm the low of day or reversal, and then once you form those continuation order blocks or fair value gaps away from that initial reversal, we also want those to hold, right? So that's what that is exactly, right? So what about over here? We have a low of day put in. Within the expansion phase of the daily candle, we create a protected swing prior to the driver. It creates a CSD as well, so it confirms that protected swing on the 15-minute, 30-minute. Again, it doesn't matter. It's just these higher time frame CSDs, right? This is when we can generally trust that these should hold, right, for price to expand. Now it's crucial that we haven't yet expanded, right? All of these, they have yet to expand, right? So this is retracement. We're starting to expand, right? But we haven't expanded away from it. So all this is right here is a lower time from retracement, right? And we, within expansion, we expect expansion through these highs, right? The point of retracements, right? Especially if you draw liquidity, which is something that's very crucial. We're going to go over in a minute now. This can look a couple of different ways. Now, a lot of times you're going to have a swing formation, and if that swing formation is also creating a CSD, so an ideal swing formation, this is the best scenario for continuation. If you're not going to enter, in candle 3 or whatever, if candle 4, it can also be candle 3, I guess. If candle 3 or 4 is creating a CSD on one of these higher time frames, right? This is always the best case scenario, right, where the driver is opening near those levels, and then you get, candle 3 or candle 4 is just like an intra-candle CSD. So the driver is just expanding away from the low of day, which is confirmed by these lower time frame signatures, opposing candles, or propulsion blocks. This is the ideal scenario. You can use this only 15-minute, 3-minute, but you can also just do this. Maybe there is no swing formation, but we're opening near, these opposing candles on the higher time frame. This is where you can just simply, wait for the driver to expand away from that, right? Instead of setting a limit here, you can wait for a lower time frame continuation signature, which is more of like expansion model stuff, right? You can do that in 15-minute, 3-minute, 5-minute, right? So you can also do that. Now, this is very important, right? Because we need a target. If you're going to take a positional entry, this is really where any day, to be honest. Anytime I look to trade, I want these targets to be open because I want to target, these levels. So prior to the driver, if you have some sort of manipulation, these are the levels that we want to see left open for price to expand into. So one would be failure swings, right? Pretty simple, where we have some sort of reversal to trade from. We get that continuous signature on the lower time frame. We have objectives still to target, right? Another one would be previous high and low, still available to target, because a lot of times, if you have a driver or some sort of relevant level that's straight into prior to driver, etc. Even on these red folder days, these super high volume days, you're not going to inside bar generally. You're not going to stay inside the previous day's high and low. So if you're getting involved before we take out those objectives, it's a very high probable draw, right? Another one would be, session highs and lows still available, right? Maybe the daily opens low. We put in a reversal at New York, right? New York reversal. Pair that with a driver, and you have session highs and lows to target. Very high probability, right? This is just a New York reversal, right? Daily open low, right? The open low is creating that low resistance liquidity via session highs and lows, right? New York reversal, pairing that New York reversal with the driver, we should just expect, obviously New York to reverse and expand, right? Creating the body of the candle. Now, that's really all I have for this. Now let's get into some examples, right? Because this stuff does repeat a lot. So if I go to a day like this, right, we have a low of the day put in potentially, right? This is one of the examples I went over in my invalidation stream. But prior to the driver, within the daily continuation, what do we do here? Right, we put in a relevant swing, right? Look at the space between these lows. Within the expansion phase of the daily candle, right? We're putting in relevant swings. Now, we clearly see that we have a swing formation, but we don't expand away from it. So what is that? Consolidation. Why? Because it's an inside bar, right? And we want to see expansion away from these swing points. So what do we require? Require this relevant low to be manipulated to create a protected swing. So that's what we're going to see here. This is prior to the driver. So prior to the driver, we create a protected swing. So what are we also doing? If I go on ES, it's pretty nice here. We're also opening near what's a higher time frame CSD. So again, if you're like an expansion model trader, you could enter this. If you want more confirmation, then you can wait for a lower time frame signature, right? Something like that, right? Which is just the fractal model, candle 1, candle 2, candle 3. Driver should be candle 4 expansion, right? And notice how we haven't really expanded away from this low, right? Into this high, right? These targets are still available. What targets are also still available? The previous day's high, right? So these are important, right? This is how we anticipate a driver expansion, right? These should expand around these times, right? So what you're going to see here is this is 9:30. Makes an opposing run to the draw. We still have this objective open as well. And as you see, this opposing run is just creating the low of the candle, right? And you get that confirmation right there. This is what I took. A lot of us took this. Also, taking out this little low here, which is a relevant low on the lower time frame. Look at the space between this low and this low. We already have the lower time frame reversal signature. Right, so now this is the continuation signature, right? If we go back to our little slides here, this is what this would be exactly. So if I can find it, bro. Yeah, so prior to driver, we already have that lower time frame reversal. We already had a key level. So what are we waiting for? Some sort of continuation signature around that driver. So that's what we get here, right? I'll close this out. Exactly what we get here, right? Prior to driver, we hit a key level. We have the CSD. Now we just are waiting for the driver to expand away from this low. That validates this as a true reversal. Does that make sense? We're also opening near a higher time frame CSD. All right, so it goes back to this one. If I go back over here somewhere, pretty much this, right? We have some sort of, within expansion, we have some sort of higher time frame CSD. On this case, it's the hourly time frame. So like I said, it can be the 15-minute or above. and we already had that protected swing already put in, right? We already manipulated it. So you can either enter this or you can do this. This is exactly what my entry was, right? We're opening near this level, but it's also a swing formation. It's a ideal swing formation. Candle 1, candle 2, candle 3 is creating a high time from opposing candle, right? So we're just waiting for the wick of this to be formed, right? So that's an example there. Now another example. There's a couple examples like recently. Let's go to like this day. I saw a lot of people take this, but this is something that I'm not a fan of. So if I go here, so this is something we're going to go over in our SMT slides, but we're going to go over this reversal at the highs, but also, you know, within continuation. We have to understand that this SMT is not likely to hold, right? Because again, this is something we're going to go over, but SMTs that, you know, the asset that creates a feather swing is very close to the high that got swept. Generally, these SMTs are not going to hold, and they can be used as like higher time from retracements, right? So that's kind of what we have here. We have a 2/6 SMT here as well, but if you look here, I'm not going to go too deep into that, but if you go to YM here, see how we have this SMT here, but we also have a smaller ranged SMT here. Now this is not the ideal 2/6 SMT, which is fine, but like I said, almost every single retracement or reversal, it always has some sort of two-stage SMT. Now, what variation of the two-stage SMT that you get is going to tell you, you know, if it's a retracement or reversal, etc. But we also know that this SMT here at the highs is not really relevant, right? It's creating a very, you know, basically a feather swing, basically, right? The daily candle also supports expansion. Now, what is this here? It's a relevant swing, right? Look at the space between this low and any low there's no low that's close to in proximity. So this is a low that I would ideally want to pair a continuation with to get to this high. That's what I wanted, right? If I'm talking about Friday's or Thursday's PA. Now what we see here is, what does 830 do? It expands away from this high that got put in, right? This short-term reversal, right? You see how 830 just created this opposing run here? And then took out this high. So, whoops. So it took out this high, creating a, you know, little sweep, and expanded away, right? This is the F10 scenario, right? If you have a reversal put in price driver, it should expand away. Now what we do, it expands into this low, but it creates an SMT. If I go to ES here, right, we create that SMT. Now, one thing about this SMT though, what are we doing? It's like the same thing at the highs, right? It's very close proximity, not likely to hold. Now, what I would ideally love to see though is this SMT hold, so we can pair this driver with this reversal. But what you're going to see is, if this SMT is going to fail, right, then ideally I want 930 to manipulate this level so I can pair it with the driver, but it doesn't do that. 930 does nothing, right? It just continues lower. So it's like I can't pair a driver here for continuation, so I don't you know, view this as high probability, right? This reversal, or it's not even a reversal, it kind of is. It's not really a reversal because the low day's down here. This continuation, you know, is formed at like 11 o'clock, which is irrelevant to me in my opinion. So I didn't trade this, and I don't view this as high probability. Majority of the time, we're just going to chop within this range. But anyways, let's go to another example here. Let's go to YM here. This is a day that I traded, right? There's no high of day established. It's literally a wick, right? The point of retracement here is a consolidation, right? What are we opening near? These opposing candles, right? Here's the wick, right? The daily is opening low first. There's some additional 2/6 SMT stuff in here, but it's important that, you know, we put that 2/6 SMT or reversal prior to the driver here. And do you see how we haven't yet expanded away from this initial reversal? This is when we will get a one-sided driver, right? So here is 930. We immediately start to expand away, and then 10 o'clock just continues that, right? So this is how you can anticipate, you know, a positional entry. This is the ideal scenarios, right? Even with NFP, this has to do with purely strength switching, which we'll go into another time. Now this here, a lot of you guys saw me trade this when we didn't have a candle too, but this was purely because of drivers. So if you check here, the low of the week is printed from a relevant swing, right? And we're expanding away. Now within this expansion, right, the low of the day is created right here. So it's kind of irrelevant, right? You kind of just trade higher first. Now this relevant swing, see the space between this low and obviously any low, there's no lows near it, right? So it's like, if I want to continue, I want it to continue from this low, this relevant low, because there's nothing, under this, there's nothing under the previous low to go and manipulate, right? I don't care about fair value gaps necessarily. I always prefer highs and lows because that's where we manipulate, right? So if you check here, 930 trades into this level, but it doesn't necessarily reverse, as you see. But we have 10 a.m. news here. We do have an SMT, right? And again, some other stuff, but the driver at 10 o'clock immediately expands away, right, from this reversal at the lows. So when I see this, and then it create this CSD, this is when I can assume that we will trade away from this level and then get to these failure swings at the highs. Does that make sense? Because this is a relevant swing, right? So anytime you manipulate relevant swing, automatically higher probability. Now what about this day? This is the previous day. Prior to 9:30, do we have a high and low of day established? Right, the answer is no, right? The relevant level to go and manipulate is these failure swings, right? So what I want the driver to go do, I want the driver to trade into this level, right? That's what you see here, right? The driver trades into this level, and it also creates an SMT, right? Now this is a two-stage SMT. That's what validates this SMT here. Now, I never really like I mentioned, I don't like when this here is created, or this failure swing is so close to this level here, right? Now, what we have here is, like I said, a two-stage SMT, and it's the ideal two-stage SMT. So this is when we get that reversal signature, expansion with expansion, and now I'm pairing this with the driver, right? So here's 930, trades into the level, creates the SMT, and so it's a big difference, right? It trades into the level, it isn't reverse, right? Because it had to go and trade into a level that's kind of far away. So this is when it's not going to reverse, because it's only 30 minutes between 9:30 and 10 o'clock. So this is when I would ideally want to see a 10 a.m. reversal, which is what we get. So there's a big difference between the 10 a.m. reversals that I want to see and I don't want to see. And this is the ones that I ideally do want to see, right? It's when 9:30 is trading into a level. And here's that 10 a.m. reversal. So that's pairing that with the driver. Let's go to some more days. This, I don't know if I traded any of these days. I'm not gonna lie. Oh yeah, here's a good example, man, right here. So prior to this driver, and this is a day that worked, but it's very slow and choppy. So if you check here, or where was it? Was it 9:30 or something? Yeah. So check this out here. We have some sort of manipulation prior to the driver. So here's the 9 o'clock candle, the first 30 minutes of the candle. We have an SMT there, right? So this is the perfect time to manipulate, right? Or just expand away from, right? We have this prior to driver. So if I want, this to be the low of day, what do I want to see? I don't want to see the driver trade back this low. I want to see the driver expand, right, into these failure swings, right? But you're going to see the price doesn't do that. So that's an invalidation for this day. Even though it worked out, you see this super deep retracement, I don't want to trade that. And you're going to see that price gets there, but it's going to be in a fashion that's super sloppy, which I want to avoid, right? Even on Friday, or not Friday, on Thursday, it's like the same thing, where it does expand, but at 11 o'clock, pretty sloppy, and you're going to get faked out a bunch of times if you're entering within that time of 9:30 and 11 o'clock. You might get some false signals. It's because the driver failed to reverse. Now, What about this day where the driver is trading in to this relevant low? So anytime you have a relevant low, the space between these lows, right, inside of a gap or a fair value gap, that's generally a higher probability failure swing. Now we already have that reversal, right? And prior to this 8:30 driver, what did we already do? We already tagged this key level, right? We already have a swing formation, so we already retraced as well. So this is lower time from retracement, right? So what should the driver do? It should expand away, right? It should continue that. So here's 8:30 expanding away, and then we create this here. And what do we also notice? If I pull up the daily indicator, we also have yet to really expand away from the daily open. So this is when you're going to get a one-sided expansion, right? Not here, but the next driver, which is right here. So we're going to get that one-sided expansion, right? If I go over here as well, notice how we are opening near that driver, near this 30-minute key level. So again, you can enter there, or you can wait for that lower time frame signature. So you guys saw me, I didn't enter within a swing point. There's no swing point here, but what I am entering and doing is trading it within a 4-hour expansion candle. So just aligning expansion candles, right? The hourly is an expansion candle here. You see how it's opening near this opposing candle. And I'm just waiting for a continuation signature, right, at the driver. So here's this right here, right? Here's the 9:30 making an opposing run, sweeping out some lows, creating an SMT here. And then we're getting that continuation signature right there. All right, so now I can assume that this 9 o'clock candle is put in, and it should just expand, right? Because we still have targets available, which is important, right? This is when you can expect that one-side expansion when we have those targets available, but also the daily has yet to expand, right? So it's very important to, understand. This is another example of pairing a manipulation with the driver, because when I look here, this is the driver trading to a relevant level. Now this is super advanced because this is a counter trend move, and like I said, any counter trend or any high time retracement will have this two-stage SMT. So if you want to study this, this is exactly right. This is a 10 a.m. Example that I would consider, right? Because the driver is expanding towards a relevant level, which is the previous week's high, which forms the SMT at 10 o'clock, which is validated by a two-stage SMT and some other additional confirmations. But here we still have an objective to target, right? It's this daily low, which is obviously an unestablished low, right? It's just a wick or wickless candle. When you're trading a reversal candle, it has to open high first, right? So that's good to see. Now, we already went over this example. Going to go over this one as well. This example of 10 a.m. reversal that I would trade. So here's the driver, 9:30 expanding to a level, right? This is the type of reversal that we actually look to trade, right? If I go to ES, 9:30 manipulate this high, right? Or trade it into this high, right? So here's 9:30 trading into the high. This is when I consider a 10 a.m. reversal, right? It's a bit different if we already maybe hit this high prior to 9:30, 9:30 failed to reverse, then I wouldn't be considering that, right? I believe this day is a good example as well. So if you look at this day here, maybe some people would be thinking that this can be a reversal day because we have, failure swing to the highs or whatever. Maybe three days of expansion, right? So here's a day that we have NFP, right? I do believe, right? NFP, yeah. We have that non-farm payroll. So it's like, if this is going to be a reversal, and we're going to come all the way up here, we already have some sort of reversal at the lows, right? So what should the driver do? It should expand away from that level, right? 8:30 and 9:30 should continue up here, right? Now let's set the other if-then scenario. If you want to continue from this fair value gap lower, then what should the driver do? It should trade into this level and put some sort of reversal candle in, right? So there's your two if-then scenarios, right? Because if the driver fails to reverse from this low, right, that means that this is not a true reversal at the lows, right? So that's really a validating narrative. So as you see, 830 trades into this fair value gap, and it's not really an expansive move, right, away from this low. That's already one red flag, but it also doesn't create that reversal. So here you're going to see 930 does create that reversal. So does that tell you that the drivers failed to reverse from this low and are actually putting in some sort of reversal from this fair value gap? So this is something that you saw me trade, whatever this day was, April 4th, into this low, right, which is GXT, right? You have a 930 reversal. So remember the if then scenario, if 930 reverses, what should 10 o'clock do? Or whoops, right here. 10 o'clock should just expand, right? So this is just GXT, right? 6 a.m. Within the 6 a.m. candle, we put in some sort of reversal for 10 a.m. to open up and continue from, right? I think this day was a good one too. I remember I traded like this whole week. This is something I didn't trade. I was asleep, but this is something you could have paired with a driver. This is probably my last example, and then we're going to go ahead and end this. So the high of day is created from a protected swing. Pairing that with the SMT. The expansion away from the initial swing point, remember this goes back to our invalidation, right, should create some sort of CSD because this is created in London session. This is what we want to see hold, right? Any relevant levels on our way to our overall draw liquidity should fail to manipulate. So this relevant level, see how it fails to manipulate it? That's good, right? It consolidates. So what's the ideal scenario to leave consolidation is we manipulate, which then forms a protected swing, right? Because these are relevant swings, right? When you manipulate that, that creates a relevant swing, obviously, right? This also has to do with some SMT stuff that we're going to go over probably next week on why you can also anticipate this. But here we have a 2 a.m., 4-hour reversal, 6 a.m. continuation, right? We have 8:30 news here. So you see what we did prior to 8:30 is we manipulated a relevant swing. So what should 8:30 do? It should just expand into this low. Right, so this is when you get that one-sided expansion. But you're going to see, so you could have already taken this as a positional entry. Now, if I was to trade this, here's your trade right here. All right, this would be your trade right here, right? Now, obviously, your overall target would be here. You could have maybe taken a partial on the way. Like I said, I didn't trade this, but you're going to see that comes back. But here you have to go break even because obviously you do not want to see price come all the way back up here before taking an objective. Makes no sense. We're going to see that does happen. So you have to take a partial here, maybe take a break even, whatever. But what this is here on the higher time frame or whatever, in the 1 hour or whatever, this is a relevant swing as well. So it leaves these equal lows here. So it's like price is not likely to reverse from equal lows, right? I mean, look over here. They're both equal lows. So it's like this is still a relevant swing, right? Where we see 930 trade into that level. Right? So if 930 trades in this level, if we want to continue lower, like this has to be manipulated, right? Because if you fail to manipulate this level, we're going to go all the way up here, which obviously we don't want to see. So if this manipulates here, then what should 10 o'clock do? Which is also a driver, by the way. If I pull up this day, you have 8:30, and then we have 10 o'clock news as well. So you have really like 3 drivers here. So obviously we manipulate this high here. No SMT, right? But if this is going to be manipulation, then what should 10 o'clock do? It should expand away, right? So this is also GXT, right? But here's 10 o'clock, immediately start to expand away, right? So this is a trade that I also took. I didn't take this one at 8:30, but I did take this one at 10 o'clock. And yeah, guys, I'll probably wrap it up there. I want to show you guys this one as well. Honestly, this whole, we'll go over this real quick because this is some good examples here. So if you check this out here, prior to the driver, this is 8 o'clock. 8 o'clock candle, right? We trade into this low and we create this SMT. What did we not do? We didn't expand away from it. So what should 930 do? It should expand, right? So that's what it does. And then 10 o'clock continues. 10 o'clock is opening up within a swing formation. right? So we can trade that. This is what I took on this day. I took ES on this day. I can just remember this here. This goes back to some SMT stuff, but you have an SMT on both sides, right? But this goes back to phases of price, right? If this SMT over here, right, puts in a failure to reverse, means that NQ is lagging behind. This SMT is fake, and this will be a target, right? So if you see prior to the news or the driver, we have a fair value gap, right? So we want the driver to do what? Trade into this fair value gap, right? So it does that. It puts in the reversal. So 10 o'clock should continue to go and break those SMT lows, right? So that was my trade there. If you go to this day, I'm like speed running this, but yeah. This is a good example here because prior to the driver here, we manipulate, right? And we also have a CST. This is could be a low of day candidate, right? Absolutely. It fits all the criteria, right? Now if I go to the 4-hour candle, it obviously doesn't support expansion, right? So anyways, you'd have to wait for 10 o'clock, right? But what would we want to see if this is going to be the low of day? We want to see the driver expand away, right? But it fails to do that, right? So that's your invalidation for this to be low of day. And even if this wasn't let's say this is consolidation. Let's pretend this is consolidation. Where's the only level to reverse from? It's this low, right? So the driver should go manipulate this low. So that's what we see here, right? We have this reversal candle. Within it, we have this reversal signature, expansion, method expansion. We have the CSD. So now we're just trading the continuation phase, right, into this high right here. So this is how we trade a reversal candle, guys. We get in before we take out objectives, right? So anywhere around here, right? And ideally in the upper half here. Now there's another way we can already anticipate this getting hit. It's because YM fails to reverse here. So if the strongest asset fails to reverse at a relevant swing, that means the other assets are lagging, right? Which has to do with some SMT stuff, but here you get that continuous signature before ES and NQ even trade it into this high. So that tells you that this gives you a conviction that NQ and ES will trade into this high. So that's another added influence there. But yeah, those are all majority of the days is, we use drivers to confirm and validate or invalidate our ideas. So if I just go to this day here, this is a trade that I remember taking. It was like over here or something. It was around NFP or something. Yeah, NFP. So here we have this manipulation. This is the only time I'll ever fade a 4-hour candle. It's around NFP CPI. Okay, within the 6 o'clock candle, because we have the volatility to create that large wick and also expand. So if you see here prior to 8 o'clock, which is NFP, you manipulate and have an SMT. Right. So prior, if we do that prior, then what should happen at NFP? Right. We should expand away. So here's 8:30, expanding away from the already established high of day or manipulation. We have yet to trade into the previous day's low or even this intraday 1-hour low, which is a fair swing. So this is when you can, when the driver does actually expand away, that validates narrative, right? Because if it was going to be bullish, the driver should just expand into these highs, right? But it doesn't do that, so that validates narrative, right? So I'm going to leave you guys with this. I don't have enough time to go over the whole slideshow and answer questions. Now, if you guys have questions, always ask me in the chats or open up whatever these things are called to, give me a question. I'll definitely get to those. But yeah, guys, I'm gonna leave you all with that, and y'all have a good weekend.